Good morning. This is Dylan Jovine with Behind the Markets. Happy Monday. Today is Monday, August 18th. And I hope you guys had a great weekend. Before I continue, I just want to say that they are deadlining the webinar today. So in case you have not gotten involved, this is your last chance. So anyway, today I want to talk about the healthcare sector. This was on my list of things to talk about before it was reported Friday, actually late Thursday, that Warren Buffett bought shares of beaten down healthcare company, UnitedHealthcare. And the reason I want to talk about the healthcare sector is that the stock market is really overvalued. A lot of areas are really overvalued, a lot of areas. The Buffett Indicator, for example, hit an all-time high of 211%, making this the most expensive stock market valuation in history. Also, technology stocks have never been bigger. The NASDAQ's market cap relative to the US M2 money supply is now at a record 145%. This also officially surpasses the peak that happened in the 2000 dot-com bubble. So we know that we are in a very pricey market. It has made us have to work super extra hard to find good bargains. But there is some good news here, as Buffett proved on Friday when his Berkshire Hathaway announced that it bought UnitedHealthcare. The healthcare sector itself is so undervalued, it's really unbelievable. And guess what? Again, we have a service called Biotech Insider. So, healthcare stocks have definitely been like the sick person of the S&P 500 this year. The market's gone up, but the Healthcare Select Spider Fund ETF has gone down about 4%, much worse than the S&P's 7.1% rise, and everybody's feeling the pain. That is really the unbelievable news, but I'll tell you something, a lot of good companies look super, super attractive here. The ETF itself is trading at 16 times earnings, which is about 30% lower than the S&P 500, and they're expected to grow their earnings at 11% per year. So it's funny, these have been the dogs of the market, but in my experience, if you don't buy things when they look absolutely terrible, you will never ever buy a bargain. That is the key. It's like that old expression about profiting during wartime. If there's blood on the street, buy land. It's really unbelievable. I remember back learning when I was starting reading Roman history that Crassus, who's basically one of the triumvirs with Caesar and Pompey, they formed the first triumvirate. Whenever there would be a fire happening, this is how he made his money. He was the richest man in Rome. How he made his money is whenever there was a fire at somebody's house, he started his own little private fire brigade, and he would rush his little firefighters, basically pulling buckets out, to that burning house. Then he would offer the owner of the house money if they sold him the house burning. Then, if they accepted it, he'd put out the fire. This is before, they didn't have private fire departments back when he was doing that. This is even before Nero's fire burned during the Roman Empire. My point is, when things are on fire, they usually make great bargains, and the healthcare sector has been on fire, which means that there are a lot of good bargains. We're seeing bargains now. The big company names, we've recommended companies that are just trading at 13 times earnings, big, dominant, big pharma companies. There are biotech companies that are basically trading for less than the cash they have on hand on their books. So basically, some of these biotech companies have some great killer science, great killer drugs, and those drugs, when you buy the stock for the cash it has on hand, basically it's like they're giving away the science and the drug and the research for free. Buffett buying UnitedHealthcare, shares UnitedHealthcare, just is a signal, and a lot of folks, that the healthcare sector is trading as cheap as I've seen it in a very long time. It's definitely been a bear market in the healthcare sector, and that has really sped up since RFK Jr. took control of HHS. and we didn't know how the bill would work. This big, beautiful bill would work, and et cetera, et cetera. So anyway, when you see a big company like UnitedHealthcare stumble, such a super competitor, it's in the super competitor category, and you see that really savvy investors are going in to buy it in a market that is this overvalued, where are you going to find bargains? And one of the best places we talked about this on the webinar, like suppliers that have been behind the scenes that are making their way to the front lines, as we talked about in NVIDIA secret supplier that we're talking about in a webinar last week for this new chip, the storage chip. And now you also see another opportunity, how we're looking for bargains here in the healthcare sector, which is something that we've been beating the horn on here ever since all year long, even as the sector has gotten worse. And it's made us look silly sometimes with some of our positions in Biotech Insider. But again, we're adults. We don't day trade our systems. If you look back, you pulled the camera back on Biotech Insider, that we've had over 50% average profits across all winners and losers on closed positions since we launched this puppy in 2018. So biotech has been very good for us over time. And boy, oh boy, is this one of those times that you really want to get into it. Anyway, that's all I have. Have a wonderful Monday. I'll see you tomorrow.